And besides Warren and Ted Wexler and stuff, we have several other analysts and several other tools, mostly available at zero or close to zero cost, that are quite exciting and quite interesting for me to use and leverage. And so first, I'll start with some of these things that are coming up on the screen. Let's start with Value Investors Club. So, how many of you in the room are familiar with Value Investors Club? If you could just maybe raise your hand. We have Arvind. I'm deeply disappointed in what you've taught them so far. How come you kept them away from the Value Investors Club? Oh, okay. Sorry. Maybe I'm not seeing the full classroom. So anyway, I don't know if you guys know the history of Value Investors Club, but it was set up by Joel Greenblatt, and and Joel and his partner John Petrie, basically they many years back. I think this is going back to the early days of the internet. They had done an analysis of some business that they were, making an investment in, and I think they were on some Yahoo message board related to that public company. And on that Yahoo message board, they saw one particular poster put up a extremely detailed analysis of that business that they were looking at, and the analysis was actually superior to even what they had come up with. And this person did not work at a hedge fund or a mutual fund. He was just an amateur investor investing for his own account. And they were just really surprised that, out in the Trans Am, if you will, was these, islands of incredible talent. And so they thought about, well, how can we tap this talent? And so they came up with this idea of the Value Investors Club. And what they decided is that they would invite anyone on the planet who had an interest to become a member of the club. And to become a member, you had to submit an investment idea, and of course they would review the idea and see if it was good enough to admit you into the club. And then once you got into the club, you were required to submit, I think, 2 ideas a year. And I don't think you could submit more than 4 ideas. So they wanted to limit how much people could submit. And then every week they awarded $5,000 to the person who came up with the best idea. And so they basically said that for about $250,000 plus the cost of running the website, they would get this amazing information flow and cut out all the nonsense that you get in Yahoo message boards. Because they would basically, it's a basically curated site about what gets posted or not. And actually, if you go on Value Investors Club, you will see in general that the average write-up is quite high quality, and many of the folks who are posting write-ups and such are not professional investors. In fact, there's a person who has a handle on Value Investors Club called Charlie 479. So you can do a search on Charlie 479, and it'll pull up all of the ideas that he submitted. I don't know if he's been active lately, but his ideas were so good. So the other thing that Joel Greenblatt and John Petrie did was that if they were truly impressed with what people came up with, then they talked to them and they set them up in the investment business. They basically seeded them money to manage, took a stake in the general partner, and introduced them to other people who might want to invest with them. And so I don't know the number, but I personally know of several funds that were set up by people who originally came on the Value Investors Club just as amateur investors, if you will. And so anytime I look at an investment idea, let's say, in fact, like for example, last last June, I noticed. In fact, it was before that. Actually, it was in the first quarter of 2012 when the Berkshire 13F came out for the first time. They listed General Motors as a holding of theirs, and of course, I hated the car business. It's high capex. It's got unions. It's got all these, consumer taste vagaries, and you have to make all these massive investments upfront and such. And so, for many reasons, I never had any interest in the car business, and I immediately, looked at an idea that Berkshire bought, and I rejected it. And then, when the second quarter of 2012 13Fs came out, I noticed that General Motors was also a top holding of David Einhorn's. And I said, why would David Einhorn and Berkshire Hathaway both take these large stakes in this pathetic company called General Motors? And so I decided to do a drill down on the business. And usually when I do a drill down, one of the first things I do, I look to see if that idea is posted on Value Investors Club. I'm not sure if I found anything there or not, but that's usually what I do. Is that's the first place I usually go after I just look at the Google Finance or something on the company. And of course I did a very thorough drill down on GM, and it dawned on me that there were a number of reasons why an investment in GM made all the sense in the world, and that led me to actually take a position in GM. And we still own that position. I don't have much to say about it except that we're up, I don't know, more than 100 to 120% so far on that position. So thank you, Berkshire, and thank you, David. You're just fantastic analysts. I might have to send you a bonus or something. And Value Investors Club is fantastic. Some Zero is something like that. It's another website where, again, it's a community of mostly amateurs who are posting their best ideas. Guru Focus is another good website where they've created a list of gurus, and again, they've got all kinds of data on what their top holdings are, what they're buying, what they're selling, and so on. The manual of ideas is not free. I think it's about $900 a year or so, but I think it's exceptional. $900 a year is a little less than what you might pay an analyst every year, and what the manual idea does is it makes my job even easier. So I don't even have to go through 13Fs every quarter. John Miljevic, who's a good friend of mine now, who puts out the manual of ideas, basically puts out these very nice booklets with a couple of pages on each fund, if you will, and what they've been buying and what their top holdings are and all of that in a much more easier to digest format than the 13F. You can get the same data through a 13F. It just takes a little bit more work and time. So that's another great tool. There's a message board called the Corner of Berkshire and Fairfax, which is also exceptional. And again, when I look at, when I find ideas to research, I look at Value Investors Club. I'll also look at Corner, Berkshire, and Fairfax. And of course, Edgar Online is run by the SEC. I pay them, I think, $10 a month, and that gives me access to all the filings in nice formats and such. There may be a way to get that stuff for free, but it just makes it a little bit easier. And then, there are various newsletters like the Graham and Dodwell, which is a newsletter from the students of Columbia Business School. And so these tools are actually quite valuable. And I think I found them very useful. In fact, if I look at our portfolio currently, I can think of only one stock that we own that is not a cloned position. That means it was not picked up from somewhere else. And so I should really call the fund the cloned fund. But let's try to keep this between us, and let's not tell my investors about it. They might object to the outrageous fees I'm charging them. And So with that, why don't we do this, Arvind? Why don't we play that video? And that's about 2.5 minutes, and then we'll start Q&A and such.